Intel reported stronger than expected quarterly results, but it's the weak guidance for the current quarter that's hitting the stock so hard this morning. That stock right now down by more than 10%. Joining us to go over the results is Chris Caso. He is Wolfe Research Senior Analyst. And Chris, obviously this is coming as a huge surprise to the street. What happened?
Well, it is really, I'd say it's really kind of three things going on from a revenue perspective. One is the PC market. It started this correction about a year ago. It's still sluggish. In addition, there's been this sort of rolling inventory correction within semiconductors. You know, that hit some of Intel's non-core businesses. They have a big interest in Mobileye, obviously, that negatively pre-announced. You know, also the former Altera business, which is broad-based, similar to what we heard from TI at the beginning of the week. And also, you know, the core server business, the issue there is that, you know, with what's happening with AI and all the CapEx that needs to go to spending to support these AI servers that's benefiting NVIDIA, there's just less CapEx available for the traditional CPU server, which is the bread and butter of Intel's business. So in that sense, you know, there's some negative effect by the fact that they're just not participating in what's going on with AI right now.
I think the longer term kind of playbook has been that they are going to invest in America, build all of these chip fabs here, the factories here. But that's a long way off. I guess you kind of have to convince people that this plan is going to work. Do they have that believability on the street, or is this sell-off an indication that no, they're not going to get the goodwill?
Well, you know, more folks, and we have an underperform rating on the stock, so we haven't quite been there. But the bull case has been that Pat Gelsinger has effectively been successful in his strategy to you know, fix the manufacturing. What they talked about is, you know, 5 process nodes in 4 years, never been done in semis before, and, you know, looks like they've done it. The question on that is, what does success look like? And, you know, part of the issue over the next 12 months is some gross margin pressure, which is resulting from the depreciation from all the money that they're spending right now. But really, when you get to the end of it, really for Intel to be successful and to get a return on all the money that they provided, they need to build a foundry business, something compete with TSMC. And, you know, the thought there is, you know, we need geographic diversity in semiconductor manufacturing. That's one of the things Intel will put forward. They're going to have an event next month where they're going to make the case for that. But, you know, our view is it's uncertain at best, and it still will take years for that to materialize. So our view is, if you want to be bullish on Intel stock on that, you still have to be very, very patient to do so.
So the stocks you really like in this arena, I think you've got outperform on AMD, Qualcomm. What other names?
Yeah, so NVIDIA is our top pick. Yeah, so NVIDIA is our top pick right now, and you could see there's certainly an AI bent to that. You know, I'll point out that after, you know, the estimate cut for Intel right now, NVIDIA and Intel are at the same valuation on calendar 25 numbers. And the concern on NVIDIA right now is, boy, things are so good. Is it sustainable? But, you know, we just see that there's so much legs to AI right now. NVIDIA is so dominant in this. You know, they're supply constrained today. There's a lot of room for that. You know, in the case of AMD, they're, you know, certainly much smaller and newer on it. But the reason why that stock has done so well is optimism that they will be sort of the AMD to NVIDIA in AI, the same way that they have been the AMD to Intel in CPU for many years.
We were just looking at all the stocks. AMD down about 2% on this news this morning. Even NVIDIA off by about 1%. You think that's a buying opportunity, or should this cast a pall over the rest of these stocks as well?
Yeah, we don't think what's happening with Intel has much to do with NVIDIA at all. In AMD's case, there is an overlap, right? So you know, Intel talked about the low end of seasonality for both the PC and the server business. That does have an effect on AMD. You know, we do think, you know, there's potential for some estimate cut on AMD into the numbers, but the long game on AMD is really about what's happening in AI, and obviously what Intel talked about doesn't have any effect on that.
What would it actually take to change your mind on the case for Intel? I mean, if they're talking about these lower margins through the entire course of the year, is there basically nothing they could say that would make you like this sooner?
Well, and I think from a 2024 standpoint, no one's owning Intel for 2024. It's a disappointment in the meantime. And again, the issue is cash flow too, that they're not generating cash. And, our view on Intel right now is kind of more relative that, we just prefer, growth and cash flow, over the next 12, 24 months. But looking forward, farther out, the success of that foundry business is very important because, in our view, that's really the only way you're going to get acceptable returns on investment for the money that they're spending on manufacturing right now. We think it's going to take a while. We think there's some convincing that it still needs to be had. But I think that's what's needed for the stock to work is that foundry business to have, just plausible success in that business.